What up, y'all? It's Tori and Paul, and today I want to talk about something that's very overlooked. And let's get it going. Let me hide this floating thing here. So, what's overlooked is the simple stuff. Yes, we have moving averages. Yes, we have multiple templates and everything like that. But what is overlooked is trends. Market structure is mostly overlooked because for most people, um, they haven't either took the time to develop the skill, or they rather focus on the result instead of the way to get the result. So let me just show you something that with me looking at the charts all the time, what I notice is, especially with what I have here, 100 moving average. I've made this template to condense the attenuation strategy template, but what I noticed is something very cool. When you have if you're looking for a sell, you want to sell off a lower high. If you're looking for a buy, you want to buy off a higher low. Okay. In order for you to have a lower high, there must be a higher high prior. All right. So let's look at this. This is a high. Okay. And then where am I looking for the lower high to take place? I'm looking for the lower high to take place at a previous lower low to show consistency in market structure. All right. So my area of interest is under here. So whenever I have an opportunity to sell, I want to be selling under this line until the trend changes, of course. Okay. Now, the first opportunity you have to sell will be right here. Second one right here. Okay, it goes up, and then you have it come back under here again, giving another area of interest, because we have 4 touches. Okay, and the market is at this point in time is still trending down. So this would be 3 good trades. Okay, now obviously we have divergences and all that other type of stuff. Well, we're talking about trades that are easy to see. For most people, they can't see this. They see a low, see a higher low, but what confirms the trend is when this is broke, when the trend changes. That's the only confirmation you need. Did the trend change? Yes. How did I know? Well, price blew past a previous level of resistance. Okay, now I'm looking for higher lows. Okay, looking for higher lows. Okay, so it went past this. Let me scrap this. Went past this. So a higher low will be above this area. Okay, didn't get much of a pullback, so the next area inches for a higher low will be here. Okay, it didn't pull back here yet. Okay, kept going, gave you a higher low. Okay, so we got another area of interest for a higher low. So I'm looking to buy. I got a higher low here. All right, hook came up, came back to this area. I'm entering into trade. Entering the trade. Real simple. I got the trend on my side. I don't have to worry about selling. I got a higher low. I even have a previous higher low that I could use as a stop loss. I have a point in time where I can use it to take profit, or I can ride it up to see what happens. All right, real simple. Once this area is broken, now I have I have a high that could be turned into a higher low. When you're looking for higher lows are the result of higher highs that are surpassed, that become, once a higher high is surpassed, it becomes a potential point to look for higher lows. Okay, then I'll break it down on the other side. All right, when a higher high is surpassed, it becomes the level of a higher low. To make sure you guys understand that this is a high. It was surpassed. All right. So now what do we have again? We have a higher high that was surpassed. We have another higher high that was surpassed. So this is our level of, this is where I'm looking for my higher lows. Okay. You had this minor pullback and get to give you a higher low, but you have a area where if you got into this trade, you put your stop loss under here and you ride that thing up as high as it goes. All right. So had a little ranging, so you could have made this your TP or wait to see what happens. Once this higher low is broken, this higher high, if these higher highs are broken, what does it become? It becomes an area for a potential higher low, which is a potential entry for the long trade. The trend is still showing up. There's no crossing of the 50 and 100 moving average, so we really don't have much to worry about. All right, so it gave us this. It gave us a real quick pull down during the spread hour, but honestly, if you were in this trade for the buy, you should have stayed in this trade. This right here was a stop punt for continuation. It won't stop punt to continue down in most cases, especially when the moving averages are not crossed. So, all right, let's look at this one more time. Real quick movement. You got a higher high that when it was surpassed, it became a higher low and it pushed up. Okay, so all these opportunities came from just looking to the left. Looking to the left, not trading against the trend. You don't use the higher high as an opportunity because you don't know how high it's going to go. The only way you know if it's a higher high is by the retracement. The only way you know if it's a lower low is the only way you can see the lower lows or a higher high is off the retracement against the trend. We do not trade against the trend because we are banking on going in line with the trend. There's more opportunities to go with the trend than it is to go against the trend. And then even as far as trying to determine whether the trend is changing or not, we don't do double tops and double bottoms. It's easier to see it, to see the trend break than to take the trade. All right. Now look, we have a high with a higher high. Okay. So we wouldn't have traded this, even with the divergence. I get all that. I'm not worrying about that. We have a high, we just created a low. Price breaks this low. Okay, now we look, it comes back to this. Okay, so at this point in time, we have, this would be considered a neckline. Price came here, price came up, breaks it. Now we have a lower low and then a lower high. Okay, so with the lower low and the lower high, nothing is saying we have the moving averages are at this point in time, we have lower lows, lower highs. Okay, so where am I looking for my next trade? I'm looking for my next trade off this because this was a lower low, but I need a lower high to be under this lower low. I'm not worried about this. This is not enough. This is not enough consistency for me to try to take this trade yet. This is more consistent. Okay, so we got a lower low turned into a lower high. Price breaks this low. Okay, which means we have another opportunity for this lower low to become a lower high. And what does it do? It does just that. It breaks it, gives us an even lower. It gave it a lower than that, and then a real major low. Okay, but the thing I love about price is that it'll give you that breakout feeling to pull back major. And this is why we don't trade. We don't trade against the trend because of moves like this. Now, most people would think, okay, it gave a low. Whenever you see the market gives you a low and then gives you a gap, full value gap, it's going to pull back this way. Okay, it's definitely going to pull back. So it pulled back, and what do you have? A lower low turned into a lower high. This is the next area of interest for it to look if you're looking for a trade to continue down. Okay, we got the stop hunt area, all that. That's good. So price comes, and nothing I want to say is when you're looking at these moves, and you're trying to figure out take profit, the safest place is to look at the previous low for take profit. Okay, when you're getting into new areas of the trend, you can either close your trade at these previous lows, or you can put your stop loss in profit to see how far it goes. And something like this, because this is so tight and you have this gap over here to fill, this is where it came from. It gave 107 pip move to the top side, so it had to fill that in. So depending on your level of understanding, mind this is the 1 hour chart. It changes on different charts. You see more ups and downs, but the 1 hour is pretty consistent with giving you valid ups and downs without it being choppy. All right, so we got a low. Okay, it comes back to this lower low area, which creates a higher low for a continuation down. All right, now like I said before, it's safe to say that once price comes here, that can be a take profit. It comes, it give you it twice. It hit you once, and then it gives you another time. You should be out, and once you get two like this, you should be out with the wicks pushing up. That's telling you the trend is getting ready to change. Now, are we looking to trade anything as of yet? No, I'm not trading that. Why? I need to see a higher high turn into a higher low. Now, this is the cool thing about how the markets work. This would have been a higher high at this point, even though it changed from a lower high to a higher high right here in the same switch. All right, because the markets are changing, we have to change terminology. You cannot call that a higher low if the market's coming from a low place. So this is a higher high compared to this. So once the market breaks this resistance turn support, it puts you in position what? For a higher low. In order for it to be a higher low, if you're looking from left to right, the market would have to go past it and then come back to it. All right, this is a higher low. All right, now you have the option to say, I'm gonna trade this or leave it be, depending on your level of ability. It's good to see a higher low, but it's even better to see that second higher low is a more confirmation, especially when you get that higher low after the moving averages have crossed. So you got the high here, and it's during a session where most people don't trade. If you need to see more confirmations as far as a trend, let it play out. This is your first higher low. Let's see if we can get another higher low. So this is a high. The higher highs become higher lows. All right. Market didn't come all the way to it, but it came close enough. This is a higher low. This is a repeat of the higher low. So both of these trades worked out. This was a buy. This was a buy. Price broke. This created a high. Price breaks this high and it gives a higher low. Breaks it, comes back to it, gives you opportunity right here. Boom. To the top side. Now this is area, this was a higher high. Okay. Higher high. Price was as a trade. It broke through it, kept going to the top. All right. Comes, gives you a lower high, comes down and give you that, push up lower high. This gave you a neckline break, which could have been an instance for a lower low turned to a higher low. A lower low, forgive me, turned into a lower high. So lower lows turn into lower highs when the trend changes. And what is that? Lower highs change into higher lows when the trend changes. Let me just put some arrows here to help y'all see this. All right, so we're gonna put this here, and then we're gonna put this here. I'm trying to make these shapes a little bit bigger. Let's see if we can make it a little bit bigger. No. All right, so we got the up, we got the down arrow. And I want to change this up arrow to green. I can change the color. I should be able to change the color. All right. So I said. All right. So Let me go back up here. Higher lows, lower highs become higher lows, and make sure right. Lower highs become higher lows when the trend changes. Okay, and then on the flip side, grab an arrow. That should be one more arrow. Higher lows become lower highs when the trend changes. All right. If you need to repeat that, watch it again. It's been noted. Okay. Now this is so key to me because this should be your focus. And if your charts are too clogged up with moving averages, it's good to see things connect, but it's also good to see what's the plain sight. Keep it simple. All right. All right. And this plays for it keeps going. So let's continue to go. So we have a higher low turned into a lower high. We have the price break. You can take this right here. Where you at? Grab you. Not you. I want you. Scoot you over. All right. Yellow low. Price breaks the low. This becomes another opportunity to find entries. Okay. Lower low turns into a lower high. Once a trend is trending, when you have trending markets and a bearish trend, which means the price is going down, after the trend has changed, you will see lower lows turned into lower highs. And these lower highs are your entries for trades in the trend. Okay. In a bullish trend, you will have higher highs become higher lows, and the higher lows are your entries to trade with the trend. All right, let's keep it going because we want to, work on repetition. We have to put our time in. Please do your due diligence with your timing. Look at charts. Look for higher highs and higher lows. And if you got to create a rubric or create a scale or some type of schematic for you to understand what you're looking at, do so, because I'm telling you, it's going to change the way you look at the markets. You will not be pump fake by price. You will not be confused by all the spikes. Okay, because you understand what you are looking for. You're not even taking trades if it's not falling within these values or with these zones, because that's where the money really matters when it hits these areas of previous support and resistance. And we're not, we get all that, but it's like going up and down the stairs. You cannot expect to go up the stairs if you're heading down. If you're walking down the stairs, you cannot expect to step up. If you're walking up the stairs, you cannot expect to put your foot down through it, as if this. And the only way the stair would change is if the structure of the floor or the stair was different. The reason we have market structure is the same reason you have stair structure or stair. The way stairs are built, they have to have a structure for them to be what they are created to be. In order for the market to be justified, it has to have a structure to have some consistency for it to be what it is. All right. So let's say we got this higher, we got this lower high. We had a little bit of pullback. It's cool. We can work with that. All right. All right. Now, like I said before, the low that was created before this pullback to this area, that can be your take profit. If you want to play it safe, let that be your take profit. Okay. If you want to see how far it goes, at least clear out, close half your positions, and then let it ride out if that's what you want to do. All right. But that'll be up to you. As far as the entries and exits, I just want to give y'all that. Entries could be the pullback to this area. The exit could be the previous low it came from. However you want to do it, you will figure that out. But I want to show you at least the entry portion, which if you get the entry right, you can put your stop loss and profit when you get in profit and let it do what it do. Okay. Here go another one. All right, this is a low. The lower low can become the potential entry. All right. Like I said, all of this could be, don't worry about this. You get the lower low. So you're only looking at price when it breaks this level. All right. This is a lower, this is a higher low. We want lower lows. Okay. Sometimes the price will come back into this neckline to retest it, but ultimately it's going to push down past this lower low if it's a true trend. Not a range. If it's a true trend, it may pull back up, and you will see that a lot with like gold or anything. Okay, never overlook the neckline. Sometimes price will pull back past the previous low or past the previous high to come to a neckline that may be more of a positioning, but ultimately it's going to continue down. Okay, so what I mean is, okay, let me just put this here. So we got, so this right here, it came, went up, came back, put up, and then continue down. So this is technically a neckline. All right. So price could come anywhere in here, but ultimately, if the trend is down, which it is, it will continue down. Okay. So you can say, look, I'm gonna wait till it comes to the neckline, or I'm gonna wait till it comes back to this low, or I'm gonna at least wait till it comes to the neckline, if it comes to the neckline, because most times it doesn't. Most times it won't come to the neckline. That's just to make sure you add more cushion to your lot size, depending on what you're trading, so that you won't get caught off guard by what may appear to be a pullback, but it's really a correction for a continuation. All right. So, all right, now we got another low. All right, we got this low. See how long this is going. I'm trying to keep these videos short and concise. I don't want to be on here too long. Let me see how long we got. Yeah, I don't want to make this too long. I'm not going to keep this long. I'm trying to put out videos, 2 or 3 videos a day, just to show y'all what I'm seeing, to be consistent. But looking at the higher highs and higher lows. All right, now we got this. Look, we have a low. All right, now price broke this low, came back to it, broke it again, but then it pushed up all the way back to this portion. All right, now depending on, now overall it broke this low, but it pulled back about 80 to 90 pips. Okay, sometimes you want to, it's going to continue down, but sometimes for the sake of a liquidity grab, it'll pull back up. All right, so once you see lows like this, if you're going to trade, make sure you take a modest trade. Or, because it did give you this, it gave you a lower low. Okay, it came here. Like I said before, you could have used this low as a TP. So if you did trade in this area, this is your TP. So if you got in here and you got your 25 pips, that's cool. It's better to take what's given than the risk losing everything because you're not letting it play out. Sometimes the market will pull back to a previous low, okay, to ultimately continue down. So it pulled back. It pulled back to a previous low after the moving averages cross, which is, for me, oh, that's game time. That's game time, because it's telling me the same thing. Like, even with all this, don't be confused. Don't be confused. This is a continuation down, okay? Unless it decides to break up. Now you see how it's been ranging. You've been getting lower highs with consistent lows. This appears to be a descending triangle pattern, which ultimately breaks down. Okay, and when you're looking at these patterns, you want to see which side of the price action is getting. If it's an ascending triangle, you will have higher highs, you have higher lows with consistent highs. when it's a descending triangle, you will have higher lows, you have lower highs with consistent lows, and then it breaks through. But we'll get to that on the next time. But all I'm saying is, look at this. This would have been a trade that I would have put a lot of stacks on, and if nothing else, got out there and then came back in to see what was going on, because this right here, this low is what's already given. All this other stuff has not been revealed. If all I'm seeing is this, I know that it has the potential to come down to at least this low. So I'm gonna get in and take profit at this low, and then from there we get back to it, and it does it just like that. I seen that this changed my thinking on trading, because it just shows you how simple this stuff is. Okay, so look, it gives you a lower low, you take profit, it pull back to a higher low, which is still crazy, because that's what the liquidity grab. It's grabbing all these people who, may have trades or stop losses in profit. So it had to pull back up. It's always some type of pullback. It's always going to be a pullback. But ultimately, it get this. If this was your if these trades were your trades, you would have made good money. Period. You would have made good money. Okay. It's like that's the most simplest thing ever. Okay. I haven't even spoken on TDI, and I'm not, because I feel like it's cool to know, but it's not necessary to know how to make money. You can make money in a simple form. You can make money in a simple form. Okay. One thing I want to say after I make this point, I'm gonna start to end these videos with things that I've heard that have catapulted my life tremendously. The catapultation of your life starts in your knowledge base and your understanding. So after I make this point, I'm going to make a statement, and I believe it's going to change your life forever. So after you take your profit here, it creates a lower low, which we look for a lower high for an entry. We get the lower high for entry, and we get out there, and we call it a day. This would have been done. We'd have been done. We're done. Why we're done? That's it. Why? Because even though we have we have lower high and lower lows, ultimately, until this range is broken, we're ranging. So this would have been the last trade. Until this thing is broken, we're done. If you want to trade the range, hey, do your thing. I don't have anything against range traders. It's not my point of view to speak on things that I don't do. Anything spoken in ignorance is ignorant. So now, looking over everything we talked about, I want to say this. Repetitive use of a limited ability will always increase capacity. Don't be deceived by your limited ability. Repetitive use of a limited ability will always increase capacity. Don't be deceived by your limited ability. What do I mean? In Forex, your limited ability may be capital. It may be only trading this strategy, only being able to trade higher highs and higher lows. If you repeat it, it will increase if you repeat trading higher highs and higher lows, looking for entries, it will increase your capital. It will increase your capacity to understand. And ultimately, you will be better than you were when you started. This is Latorian Paul. I pray that you guys have a great day. And if you want this information, look forward to this information I'm going to put out content every day, Lord willing. And you guys will have a great day, and I'll be better for it. We all will be better for this. And look forward to talking to you later. I'll do a market recap and see where we came, and try to provide and will provide understanding to the trades and to the moves that have taken place today in the market. And you guys have a great day. Until then, be blessed.